Good morning, everybody. Welcome to the Locking Your Success Options Trading for Income Weekly Update for November 10th, 2014. Before we get going, I'd like to remind you that we're not financial advisors or broker-dealers, and we're doing these presentations for educational purposes only. Also, please be aware that the risk of trading options can be substantial, so please be aware of all your risks prior to placing any trades. And also please note that we do use hypothetical computer-simulated trades and results in the presentation, and they are presented in a way that's believed to be as accurately represented as possible. However, live results may vary. Also, if you're watching this on YouTube or some other venue, come on over to our website. Check out our programs, the M3, the Bearish Butterfly, ROCK, M21, group coaching, and one-on-one trading triangle program. Join our mailing list, get your free report, the 7 secrets to becoming a successful trader, and sign up for our free weekly webinar at my website. Okay, so let's take a look at what's going on in the markets right now. And I'm just going to come over to our charts. I was having some issues with the computer this morning, so it's going to take a moment for the charts to load here. If we look at the SPX, and let me just get the SPX, the Dow. Looking at the SPX, we continued higher. Last week we broke out higher and continued higher. I was more or less expecting a pull into this trend line, so the SPX is doing pretty much as I expected it to do. The Dow, I was expecting a pull into the trend line of the Dow, and once again the markets exceeded our expectations here and pulled a little bit higher. The NASDAQ, on the other hand, is just continuing in this sideways movement. Let's see if we can get this chart up. We're just consolidating sideways after this breakout, which is fairly normal behavior for a stock that's going up. And as far as the Russell, we've come up and we're, again, consolidating at this 1170 area, which I thought was an important area a couple of weeks ago, and it's proving to be so. So from here, with the Dow and the SPX continuing to rise and being terribly overextended, I would expect those indices are actually going to come into a support level. In other words, they're going to try and set back into support. What the Russell, actually particularly what the NASDAQ does when that happens is going to be fairly important. If the NASDAQ breaks its support level on that retest, there's at least a chance that the markets are going to break down a little bit. If the NASDAQ holds its support level when those try to reset themselves, then that's an indication we're more than likely going higher. And the relevance that has is that if the NASDAQ holds support, the Dow and the SPX reset, depending on what the Russell does, unless we get if the NASDAQ holds support, it's more than likely the Russell's going to break out higher. We have actually consolidated, because this has been so steep, by probably Tuesday or Wednesday, you have to say that we've consolidated enough that this could actually go a little bit higher at this point. Still thinking that 1210 would be the total top. If we break down, I'm thinking we go to 1130. I actually do think that this run is actually too steep to maintain, and more than likely the markets should be rising, but they should be rising more at a level that looks something like this rather than something like this. This is tremendously steep. That given the case, a pullback should put us into the 1130 level here if we're going to maintain some sort of a normal up move. If this continues higher, it puts us into a really bad situation as far as expecting a very, very large and hard drop. So just watch it. As we're chasing the markets up, we got up into this level here. You're going to have to watch for a very aggressive drop at that point. So that's actually a little bit concerning if this goes straight up from a trading standpoint, because that's not sustainable. It's not sustainable in the NASDAQ. It's not sustainable in the Dow or in the SPX. It's just an unsustainable move. And to this point, it's a little more than normal, but it's not terrible. But we get a move like that in the other indices, and they get that high, that starts to become a real concern. So just be aware of that. And that's, like I said, it's when you get hurt in the market, is when you get too on top of a position up in this level here, could be a problem if we actually get there. So just keep that in mind. But that's, going forward, I'm thinking we're more than likely going to reset to this 1140, 1130 area, and then probably go higher. All right, so going into our positions, we're going to start with the November M3. Not a whole lot of market movement this week, but because we're close to expiration, we are getting a lot of changes in our T+0 line as the week moves on. So here, when the market came down, as of the open or Friday afternoon, we were about up at about $1,800. Didn't do anything here till Thursday. Thursday, we were starting to get too much delta for being outside the tent. So I did 5 1140, 1160 verticals. So before the day was up, we had these 5 shorts at 1140. Now they're at 1160. And if we look at the T-log, you can see I did that move here. I'll have to mark these. And on Friday, I did 3 more of those verticals because, again, the T+0 lines, even though we didn't get much of a price move, a T+0 line is changing its formation fairly rapidly now because we're getting close to expiration, yes, and we're having this rapid drop in volatility, or it's starting to get a little bit more intense. So that being the case, we have a combination of factors that are going to move our T+0 line profile. And here is what we have as of Friday. You can see we rolled 3 of the 1150s up to 1160. We are up about $3,500. We actually went in about minus net 75 delta, which is fine as we're inside the tent, near the tent edge here, and everything looks fine. It's a beautiful looking M3. So we'll see if we can come up into near the $5,000 level. If we, given the proximity to expiration and the fact that we've been sideways for so long, and you do get concerned that we're going to start to get a pickup in movement in the market here. That being the case, I would be tempted to jump out of this if we get anything near $5,000 and move on. Okay, so that is as far as the M3. That's what's going on there. As far as the November V Condor, really, we have nothing to do here. We're just waiting for this to expire. We are expecting a very small loss in the position here. Is there stuff that we could do to bring the T+0 line over 0? Yes, there is. But like I said, this is just a very basic beginner trade, and I'm not fooling with it. If you know M3 tactics and stuff, sure, you can get this positive. But as for now, we're just going to expire this at a very small loss for the month, so that's perfectly acceptable. Again, no moves in the V Condor this week, and I'm not expecting any moves until expiration. The only thing I'll do is if the market gets too close to one side or the other, we'll just close it down at whatever loss we have, but we won't be taking a big loss here. Let's see, we have the November Bearish Butterfly. The November Bearish Butterfly has had a great improvement this week. So let's come back to Monday. So during the day Monday, there were actually no adjustments on Monday. This is what we looked like here by the end of the day. If you remember early in the day, or on Friday, this was down 10,000. These recover very, very quickly, particularly closer to expiration, when the market finally settles out near the top, which is the way the system's basically designed to do. So here we're down 10,000 earlier in the day, down 6,000 later in the day here. We are in expiration guidelines, so we are watching our intraday delta a little bit. Although I haven't had to do any intraday moves. Everything's been end of day. But on Tuesday, the market obviously, or the delta started to increase on this thing. So we sold out of a few more of these. Let's see how many. 2 more of these 1130 butterflies. So just a very, very minor adjustment to get our delta down under 300. I mean, optimal's like minus 250. We're still 17 days to expiration. Minus 294 is fine. As we get closer to expiration, we get a little bit more tighter on those numbers. Here's what the position looked like as of Tuesday afternoon. And then there was nothing else until Friday. So Friday, well, we'll take a quick look at Thursday. So with no adjustments on, oh, actually I did something. Let's see, when did I do? When did I do that? Okay, so I did 3 of these butterflies here on the 6th, which was today. So I did do something on Thursday. I forgot to record it in my notes. So on Thursday, with this up move here, we actually pulled 3 more of these butterflies off at 11:30 and put us into this position here. Get our delta down to around minus 250 towards the end of the day. Intraday, there wasn't a problem. Here is what we looked like. Right, you can see we're starting to pull out of these here, and then, oh, actually, all this move was on Thursday. Okay, I thought this move was Friday, so I apologize. So then after pulling the 3 butterflies off at 11:30, I added the 1190s. I had just thought I did that on Friday, but apparently I wrote down I did it on Friday, but I did it on Thursday. I need to correct my notes here. Apologize for that. And so this was the end of day Thursday. This is what we look like. And then Friday, there were no adjustments on Friday. Didn't need to do anything. Go to the end of the day. We are exactly minus 254 delta, exactly where we want to be. We have 10 butterflies at 1150, 10 butterflies at 1170. Where are the other 3 butterflies, you ask? Well, they are actually on the call side. So they're up here. And again, we did that on Thursday. We put on these 4 1190s. So here's what our position looks like as of end of day Friday. We are up, let's see, we're posting up about 1,700. It's actually a little bit better than that towards the end of the day. We are in expiration guidelines. $5,000 profit target is a $5,000 profit target is what we're looking for in expiration guidelines, and that is if I get near that, like I said, I'm very happy to pull this out. All that would require is a small down move today, and this would be closed out. If we continue up, then we continue the good fight. All right, so I have a comment here, so let me just take a look at this. Okay, could I please do a regular $5,000 planned capital M3 paper money trade without IWM hedges as shown in the M3 course, small position modification video? Okay, let's, so what he's talking about is, in the video we talk about doing a small M3 without IWM hedges. Of course, you could do a normal M3 with IWM hedges and it reacts the exact same way as a $50,000 M3. In other words, you could do a $5,000 M3 trade with 1 Russell butterfly and use an IWM call. There are some challenges with the IWM call, as in you can run into just a dividend risk, basically. I mean, other than that, there's not really a big deal. There are some other challenges with using IWMs with verticals. However, if you're doing IWM verticals, you are sometimes short some IWM calls or IWM puts, which could potentially become assigned. So some people who trade small small M3s, as in $5,000, prefer to do an unhedged M3. I'm trying to think of how that's going to goof around with our it's going to goof around with our records, so we're going to have to do something with records. But yeah, let me consider that. I'll consider that, Jim. If I can do it, I'll do that. Without, like I said, we're tracking the trade, so it's going to kind of goof things up a little bit. I'll see if I can figure out how to do that and make that make sense. So anyway, here is the here's the Bearish Butterfly in November as the end of the day, and very last for November would be the ROCK trade. So we'll show you what we did with that. Come back to Monday. Actually, the only adjustment the ROCK trade had was on Thursday, but let's take a look at what we looked like on Monday. So if you remember, this was started as an M3 trade. It was converted over to a ROCK position. So here we have our 10 butterflies at 1150. We have our 3 at 1190. Our position looks like this. Basically didn't have to do anything here until Thursday, where our delta started to increase towards our limits here. And another thing too, when I'm dealing with a ROCK trade, I like to have 10 butterflies at 1150 I really want to have 5 butterflies at 1190. I don't like to run, previous to this adjustment on Thursday here where I added the other 2 butterflies in here at 1190, previous to that adjustment, I only had 3 there. I don't really like running 3 and 10. I only did it because that's what I had to do in order to get the delta numbers that I wanted. So that being the case, I'm a little fast to jump into these 1190s, which I did. I jumped into them, but a little bit more quickly than normal, just to get the position where I wanted it here. And that gives us a delta of minus 180 after that adjustment, which is actually exactly per our guidelines. And then on Friday, there were no adjustments, which is here. And that gives us, we're now up about $5,900 as of Friday, where our delta is nice, everything's looking nice, and here is what the actual position looks like. So the plan going forward with this, actually let me show the T-log, because I request for that. So here is the T-log. Actually, we'll just show you the whole trade here. Let me hit OK. So the plan for this, if this market moves down significantly here, this is just going to be exited at whatever profit we can get. This late in the trade, if I was to go back into a rolled back rock, I'd end up dropping my profit target anyway. Certainly if I go back into an M3R or something like that, I am going to drop my profit target anyway. Therefore, I'm just going to exit the trade with a hard down move. The market continues to grind up. We will continue to scale into our 1190s and then 1210s, looking for $10,000 here. We'll see if we get it, and we'll go forward. So this should be a decent trade for the month. So that's looking fairly nice. And that's all we have for November. So let's take a look here. With the $5,000 capital, isn't there an issue with day trader status? Yes, if you're trading a $5,000 position, you do have day traders. You do have, well, if not trading a $5,000 position, but if you have a $5,000 account, you do have day trader rules. So you can't buy an option and sell an option, the same option the same day, more than 3 times in a calendar month. So that being the case, then yeah, but the thing is, we don't do that anyway. I mean, essentially, we are not buying and selling the same option during the day. We do 1 adjustment a day for the most part, and that really shouldn't be an issue. If you do run into that, then like I said, you can do three day trades. You'll just get warned. You don't want to do more than that, though. Make sure you don't do that. And the other thing is, too, is you don't have to buy and sell the same option. If you buy one option, you can, if you bought say you were trading and you bought an 1190 call, and by accident you wanted to sell it, you can sell a 1200 call or sell a 1180 call, and pretty much do the same thing to the position as far as balancing it off. You'd still be in, but then you just get rid of the vertical the following day and just get back to your normal position. So there's ways around that. It's just that it's funny how it's easier trading with a big account than it is trading with a small account. They put a lot of challenges up. As a new trader, anybody as a new trader should be trading a very small account. But you got to remember, it's harder to adjust things. It's harder to make more gradual adjustments. It's more difficult because you can't buy and sell the same options. They put up a lot of roadblocks for you, which is interesting. I'm not sure why they do that, but they do that. All right, is it too, okay. Okay, so as far as a question for the November Bearish Butterfly, was there a reason I used call butterflies instead of put butterflies? Yes, I used call butterflies, the same reason I used call butterflies in the rock trade. Usually if I'm going to go ahead of the market, if I go to the November Bearish Butterfly, if I'm going to go up here, I'm going to use calls. I do that for a couple of reasons. One of the main reasons you'd want to, I mean, synthetically it doesn't matter. You can do anything that you want. the pricing of your position is going to be a little bit more accurate. In other words, your profit and loss numbers if you do call butterflies. So that's one reason I do it. The other reason I would do it if you're using some other software, like if you're monitoring through TOS or the ONE option system, you're going to get more accurate Greeks if you go into the call butterflies at this point. And a third reason is if you're using Thinkorswim or some other brokers, if you ever plan to expire this, they charge you per strike to exercise options that are in the money. So if I can keep more strikes out of the money, then I get charged less to expire this. So in other words, if I was here for my call position, I wouldn't get charged for the 1190s if it expired at this price. I wouldn't get charged for the 1240s. I would get charged for the 1140s. I wouldn't get charged for any of these three strikes on the put butterflies. I would get charged on these 10. I'd get charged on these 10. And depending on the exact dollar amount, I may or may not get charged on those. So it's just a logistics issue more than anything else. But either way is really fine. All right. So is it too late to enter a rock type position for November with 10 days remaining, or do I think there will be too much movement in the Russell? If you're a newer trader, you don't want to do that. I wouldn't enter 15 days to expiration. It's a lot safer to trade in December at this point. If you're a more experienced trader and you're used to trading into expiration, or you do a lot of weekly stuff, it's a decent weekly trade. So yeah, I mean, as long as you're trading the appropriate size and realize that you can lose a lot more money in weeklies than you can, or you're a lot more likely to lose more money in weeklies than you are to lose in monthlies. So just keep that in mind, because you're essentially going into almost a weekly trade at this point. All right, that is our November stuff. So for December, there wasn't a whole lot that went on. V Condor. There was nothing done for the December V Condor. I'll just kind of show you how that is recovering. As you remember, we had that really big up move. Our Greeks here in the December V Condor are good. Our loss is down to about 3,000. And this is where we're sitting here. If we continue in this range from like 1140 maybe to 1190, creeping up to 1200, then this may, as long as the market movement is not too fast, this may actually end up making us something here. So even if we creep down, we may end up making something, because we could probably pull the V out and possibly get positive for the month. So this has a good possibility, as long as the up move going forward isn't overly aggressive. Good possibility we actually make something here. So decent recovery there. Again, there were no adjustments there, so nothing to really show. For the December Bearish Butterfly, again, we had no adjustments, but we'll take a look at that. This suffered from a very large up move here as well. From entry, we had a decent sized move up. This is currently in a triple butterfly, and I did not add, sometimes, as with the November Bearish Butterfly, I could have added these 1170s here up in the call side. I wouldn't have been opposed to that. You could do an iron. It doesn't really matter from a synthetic standpoint. I believe when I actually added this, the market was right at 1170 or slightly higher, so it didn't really matter which way that one went, and I just stayed on the put side here. But if you remember, this is 3/3 scaled in, and we're sitting here. So this is set up very, very nice for a significant market retracement. If we retrace back into this 1140, 1130 area, like I think we very well may do, this could end up being a very nice trade for the month. We'll have to wait and see. But that is what our December Bearish Butterfly looks like at this point. And the last, no adjustments. And the last was the December M3, which did have a small adjustment on, let's just go to Tuesday afternoon, because the adjustment wasn't till Thursday. So here's what we looked like. Well, this is the same position that we had in on Monday. Let me show the options here. We're a little bit heavy in the butterflies because the volatility was a little bit high when we entered. Our delta is actually perfect. Theta's good, Vega's good. Haven't been able to make anything because the market's just been up since then, but this is what we look like here. If we go into Thursday, Again, we're outside the tent. We were starting to have a delta issue here. I am only allowing minus 50 outside the tent on a position this size. So ended up doing 5, 1110, 1100, 1110 verticals, which brought us down just under minus 50. And then again on Friday, I think I did the same thing, 5, 1110, 1120s, I believe. Yep, 5, 1110, 1120s brought us down to minus 46. Our theta is still positive. Our vega is still good. We're well outside the tent. Realistically, we're technically, if we're over 1170 for a day or two, we're going to just do the roll-up. But I'm just kind of waiting it out, seeing if the market goes up or down. If the market shoots up higher, then we'll certainly end up rolling this up. I'd rather roll it up 30 or 40 points than just, if I was going to roll it now, it'd be just a 20-point roll. We'll see if we can get that to move. Realistically, we're fine sitting here in an M3 trade for an extended period of time. As far from expiration, there's not much of a problem with that. Just watch your delta numbers. As your delta numbers increase over time, or as volatility drops, then you just gradually throw some verticals in there. If you get to the point where you really can't control your delta numbers or your T+0 line, then we can roll it up. But I don't have a problem waiting it out here because, again, if we shoot down to the 1140, 1130 area, this is a really nice looking position. Okay. So let's see what we have for questions here. Yes, that is actually all the positions we have on. All right, so do I have any reservations about starting a new December M3 trade now? No, I don't at all. I think at the probably 1120 or 1130 strikes would be a very nice position to be in. All right, to make it easy to find the current month trades, add an exclamation mark at the front of the description. This moves them to the top of my list and remove it when I close the trade. Thank you. That's a great suggestion, Mike. Good idea there. All right, if I had to move this up now 20 points, how would I do it, given I have some verticals in there? All right, that's fine. We'll take a look at that in a second. I'm sorry, I'm trying to understand what somebody wrote here. If you would see a roll-up condition, is it useful to start at new? Not sure what that means, Jens. December M3, would you please show a complete T-log? Yes, that's easy enough to do. So this is it. We just started this actually at 1080. Wow. So we started that at 1080. We rolled to 1110 and added some verticals in. So fairly simple trade so far. All right, so let's see here. Yeah, so if I'm going to roll this, I have a question about rolling this with the verticals in it. There's several ways that you could do this. Probably, I mean, when we don't really have any delta issues here. If I don't have delta issues, a lot of times, in other words, if I'm positive, it's going to depend on what my delta number is. If I'm positive delta, I can just come in here and start laying, or very flat delta. I can come in here, like if I wanted to roll to 1180, for example, I can come in here with a position this size. Obviously, if a big position, I could just 1, 2, 3, 4, 5. Add some butterflies in here. Right, which is going to bring me to about my maximum delta number. But then I can start rolling out of these, right? So I could do, or I could sell some of these off first, but I could, let's see, these are 14 here, so I'm 7. So half of those would be 7. So I can sell out of half of these, right? And I can do this as a condor order. -7. All right, so I could buy those, I could sell those. It brings me back down into this, right? Which, again, if I get caught here, is still a good position. And I could do this more gradual too. But even if I had 2 butterflies, I could roll it this way, and then I could pull off, or I could add 5 more here, +5, -10. Now I don't need the verticals on the roll-up probably. And I'm just kind of guessing how this position is going to work out. I probably don't need the verticals on the roll-up because oh shoot, so I got to do 3 -3 +3 because I'm reducing my position size. -3. All right, so I can convert that. Right, go into this trade, and then I can take these 4 out as butterflies, +8 -4. Right, and I convert that. I roll that all the way up to here, and actually, see, that brings my delta, because I reduce my butterfly size, which I probably would do at this point if I had to roll it, and just end up in a position like this, which may have been Jens's question. That might be your answer to your question. So then I would just roll up into a position that looks like that. And I'm just in a regular M3 trade at this point. Again, I can add verticals and do that. There's other ways to do it too. If you only had a 1 lot T-log, to clear these out. That would be, let's see, today's the 10th, right? Okay, why isn't it not showing me that? All right, well, let me. Oh, they're not showing. Oh, they're not showing up in the T-log, which is kind of weird, but that's all right. I'll fix that later. So anyway, I would just do something like that. Oh, that's because I'm in backtrader. That's why they are showing up. They're showing up at the same time. So another way. There's other ways you could do it. You could roll up the. I don't have the verticals. I'll fix this later. You could roll up the backside. In other words, you could roll up this the back wing and then the front wing. So you can do that pieces at a time. But yeah, you basically roll it up pieces at a time. If somebody's not in a December M3, it's a good situation to start it when the roll-up conditions are met. Yeah, you can start it now. There's nothing wrong with doing an M3. The good thing about an M3 trader is, you can start that. I don't think if we were in an M3 position and everybody in the, most of the traders there were up 5 or 10%, and it was like, 18 days to expiration, I probably wouldn't start it. But, if we're 18 days to expiration, right now we're 42, but even if we were as close as like 18 or 15, and the trade's about break even or drawn down, there's nothing wrong with just starting it. So, so no big deal there. And okay, so I think that answers that question. Complete T-log on the M3. Yeah, you were just looking at the complete T-log on the December M3, although I goofed it up, so we missed out on the adjustments. Again, Thursday we had 5 1110s. On Friday we had 5 1110s. So we'll kind of convert that out. Okay, the last question is, do I always use symmetrical butterflies on adjustments? No. We'll use sometimes broken wing butterflies. We use whatever we need to get the things done. So symmetrical butterflies I will use them if I can. I will not use them if there's a problem with that. All right, so in the December bearish butterfly, with the market being up so much, if the rut went to 1182 and I still really thought it would pull back, should I still go ahead up and roll the lower butterflies or do something else so that it wouldn't hurt the position if we got a nice pullback? Again, Dwayne, that is it's outside the guidelines, and on the position here, I'm going to follow the guidelines as they should be. So I am going to roll it up if that's the case. So whenever the delta numbers tell me to roll up, I'm going to roll up. If you want to take the risk that, or if you want to take the directional call, if the market is not going over that point, then then yeah, I mean, there's nothing wrong with that. It's just that if you're just taking a directional risk, and if you're wrong and the market continues to go up, you're going to draw down or possibly lose the trade because of it. But on the other hand, sometimes if you follow the guidelines and we get that hard pullback, then you're going to lose the trade because of that. So that's a judgment call on whether you want to follow guidelines or you want to make a market direction judgment. Do I have a minimum number of days remaining as a guideline for a ROCK trade, or would I want to at least 20 days before considering the trade not a weekly trade? You can go in the ROCK trade as close to expiration as you want. If you're willing to, I mean, you could go into that the week of expiration. There's nothing saying. It's just not a ROCK trade by guidelines. You're just outside the guidelines. If you're going to follow the guidelines, you enter around 30 days or somewhere between 28 and 30 days or 32 days. Going outside the guidelines, I mean, the closer to get to expiration, the more risk you have for taking a big loss with a market move. If you're up for that if you're up for that risk, then that's fine. If you're not up for that risk, then then go into the next month, stay further from expiration. That's about as simple as we can get with that. All right, so that is all the questions that we have for today, and I have to get ready for my presentation on the options drive, so I'm going to get going here. Thanks for joining me, everybody, and have a great week trading, and I hope to see you next week.